Hi, my name is Arthur Vinci. I'm a writer, director, and producer, and I'd like to talk to you about a number of different topics, mostly to do with the business side of film and television, that I don't think get enough coverage and may help demystify a few things for people who are just starting out in the field. Today, I'd like to talk to you about incorporation and how to best organize your freelance business, whether incorporation even makes sense or not. So this is probably obvious to you already, but film, television, web, and media production is project-based. The nature of being a cinematographer, for example, is that you tend to work for anywhere from 2 or 3 features a year to dozens of short films to industrials and corporate projects. You may be constantly going back and forth between different employers. When you're first starting out in this field, you have to get used to the freelance mentality. The first thing is, how am I going to organize my business? So if you work at a regular job, your employer is deducting payroll taxes on your behalf and is also making contributions to your Social Security fund, to Medicare, and to state and federal unemployment insurance. You are also putting in money towards those things, but basically the split in most cases is 50-50. However, if you are working as a freelancer, that is, you are just giving an invoice at the end of the job or at the end of each week to a production company. The production company is going to give you a check, and at the end of the year, they're going to give you what's called a 1099, which lists all the wages that they've paid you over the course of the year. However, any payroll taxes are on you. You now have to take care of Social Security and Medicare, state and federal unemployment insurance. So let's talk about different ways to organize your company and what the pros and cons are to each type. Now, there are many different kinds of corporations. Corporate law is controlled at the state level largely, but I'm only going to focus on the 2 most common company types or corporate types. I have to say at the very outset that I am not an attorney or an accountant, so you should probably talk to an attorney, an entertainment attorney specifically, and an accountant. The default way that most of us start out is that we are what are called sole proprietors. A sole proprietor is an unincorporated entity. So I'm Arthur Vinci, and I'm here to produce your music video or produce your short film. My business card says Arthur Vinci, producer, and I bill you as Arthur Vinci, and you give me a 1099 at the end of the year that says Arthur Vinci. The advantage of being a sole proprietor is that it's simple. You file one tax return, you keep track of your receipts and your checks as they come in. The downside is that you, as I said before, are on the hook for the entirety of your Social Security, Medicare, and federal and state unemployment insurance fringes. The other thing that is a little maybe less discussed is that if you get into some kind of dispute or, heaven forbid, a lawsuit with either somebody who is working for you or somebody you're working for on behalf of, your personal assets are at risk. Another issue with the sole proprietorship is that you are going to find yourself, if you decide to partner up with a couple of other people, you're going to have to make some kind of agreement between the 2 or 3 or however many of you there are as to how profits are split and how expenses are paid out, and how does it work if somebody decides to leave the partnership. All of those things have to be sort of discussed and agreed to in writing. Don't go into a business partnership without some kind of written agreement. But more than that, unless there's a formal structure of some kind in place to deal with issues like this and just day-to-day bookkeeping, things can get very messy very quickly. The other thing is that as a sole proprietor, you might seem to be perhaps less of a professional, or you might seem to be smaller fry, I guess you could say. I've certainly been in meetings where the fact that I had a small business, and I had Chaotic Sequence Inc. on my business card seemed to make some difference. Next structure I'm going to discuss is the SCorp, the subchapter SCorp, which is set up specifically for small businesses. Each state has somewhat different regulations on how SCorps are to be treated, how many investors they can have, and so forth. But generally speaking, they all kind of work the same. Ownership and control of the company is based on the number of shares, or the percentage of total shares that are owned by the people in charge. So in other words, you and let's say you're just in it for if you have your own company and you're the only person, you buy 100% of the shares, you have 100% of the control. If you're working with one or two other people and you are all going to be shareholders in this company, then you have to work out some kind of equitable stock split between the three of you. Once you have a business, that company is a separate legal entity from you. Monies come into the SCorp. Expenses get deducted from the SCorp's account, and then at the end of the year, or whenever you want, basically, you can take what's called a distribution, or what's sometimes called a pass-through. The net income after expenses goes from the SCorp's account into your account, and you declare that income as personal income on your tax return. Now, what's great about this is that you are basically getting taxed on the net after expenses. So the business has money that comes in, business expenses are deducted, so camera equipment, sound equipment, any kind of equipment really that's related to your field. In some cases, travel, broadband, office space, equipment and liability insurance. Those expenses get deducted. Whatever's left over can get passed back to you and to the other partners in the company. So right away, you're looking at having to pay, on average, fewer taxes or less taxes. Other thing that you can do is you can hire yourself as an employee of your own company, because your company, you do then have to pay payroll taxes, all those payroll taxes I told you you could avoid. But it does mean that you are contributing to your Social Security fund, which is a good thing. And having employees within your company does entitle you to certain tax deductions at the corporate level. It also makes it possible for you to take out, once you grow the business a little bit, other things such as a group health insurance policy, for example. You can also set up a pension fund. These things can get very complicated, and it's best, again, to talk to an accountant. I mentioned before liability. So it turns out that if you are doing business if your business is sued or gets into trouble in some way, shape, or form, that business's assets are at risk, but not yours personally necessarily. Because there's separation between the business and you may not be liable for any kind of problems that come up. Now, I'm saying you may not be liable because there are exceptions. The other issue is professionalism. Now, an SCorp, like I said, because it has an Inc. after the name, I put it on my business cards, I slap it on my letterhead, I have invoices prepared with that, and I do think it makes some slight difference in terms of either getting jobs or impressing people. Sometimes not necessarily other film people, but I may be trying to get a job from a client who is not in the film business, having a company name with an Inc. after it. if nothing else, it shows that I know how to run a small business. And since a lot of clients are small businesses, there may be some simpatico there. It also makes me seem a bit bigger than I actually am. Most of the time, the company is just me. However, during production periods, I do hire other people, or Chaotic Sequence hires other people. And when I'm going in to pitch Chaotic Sequence as a production company, I make reference to the fact that this company has a history of producing projects and that there are a number of people who come on board for the project. So again, it makes the company seem like it's a bigger entity than just me in a room. When it comes to working with partners, an SCorp is a predetermined structure. So it clearly spells out who has a stake in the company based on share percentage. It also requires you to do a separate set of books. I mean, you could write everything down on napkins, but that's a really bad idea. But if you're doing things properly for both tax reasons and also to make sense of your business, you're going to have a separate set of books that indicate when money came in and from who and who brought it in. It's often very difficult when you're just an unincorporated sole proprietor to keep your personal expenses separate from your business expenses. And having that SCorp there, and especially once you have other business partners, the SCorp structure lends itself very well to staying organized. There's another type of corporation that's pretty common for small businesses, and that's called the LLC, or the Limited Liability Company. It combines aspects of the SCorp with aspects of the Limited Liability Partnership, which is an older structure. In a limited liability company, however, there are two classes of members, what are called members. A managing member drives the bus. They drive the company. A limited member puts money into the company and buys shares in the company, but doesn't necessarily take an active role. As a result of not taking an active role, they are also less liable, hence limited liability. It's really up to the active members, the managing members, to successfully run the business. It's used extensively for film productions, for example. Usually when I am going to produce a movie, we form an LLC whose sole purpose is to produce that film. The investors in the film become limited members. Myself and the other producers become managing members. We drive the bus, so to speak. We produce the movie. The limited members get appraised periodically of how we're doing. In most cases, how much money was spent and where it was spent and how we're doing in terms of getting distribution for the film. At the end of the process, or the ends, because usually film distribution takes a very long time to unwind, any monies that come in are first paid out to the investors up to 100% plus some kind of cap, usually, of the original amount that they invested. And then barring any other kind of special arrangements that we've had to make with some actors or crew members, any profits that come in are divided equally between the managing members and the limited members. The managing members are entitled to some profit because they put in the sweat. The limited members are entitled to profit because they put in the money. It is possible, of course, to be a managing member and a limited member. I've did that on Found in Time. The structure is set up very well for folks who want to invest in something but don't necessarily want to take an active hand in running it. This could be a good structure for you to take as a freelancer if you have, say, family members or people that you're close to who would like to invest in you but aren't necessarily in the film business. There are some tax differences between an SCorp, the way an SCorp works and the way an LLC works. That again varies from state to state, so please see an accountant. So there may be other reasons why you might want to choose an SCorp, an LLC versus an SCorp to run your film business. So those are the two most common structures. A couple other sort of side benefits of being incorporated, whichever form you take, are that it can sometimes be easier to get access to lines of credit, which can be very useful to tide you over in tough times. You can qualify for small business loans in some cases. I've mentioned several times that you should talk to an accountant and also to an entertainment attorney, and honestly, you should be looking for those people to have in your life anyway. Entertainment attorneys are really great partners to have, and they ideally are looking out for your long-term interests and want to form long-term partnerships with you. So it is possible to find attorneys who are willing to be flexible on their fees if you're just starting out. I have an accountant who works with me on my taxes. I have the personal return and 3 corporate returns. Now I'm finally down to just 1 corporate return. I feel like it's a better use of my time to be focusing on running my business. And as long as I stay reasonably organized and I put my stuff into an accounting program, in this case QuickBooks, I leave it to my accountant to figure out how that sorts out in terms of taxes. Accountants can be very valuable. There's a lot more to discuss about this, and I'm happy to talk to you more. Feel free to leave comments or email me. Until next time, thank you.